Hey guys, Alex McIvor here with Dunnigan Realtors in Sacramento, California. And today I want to talk about capital gains exemptions and hopefully it could save you a lot of money. So let's get into it. So first of all, what are capital gains? Capital gains is just when you purchase an asset and they appreciate and then you sell it down the road. So if you bought stocks at $100 a share and you sold it, 2 years later at $300 a share, that $200 that it has appreciated, that profit, those are capital gains. And when you go to sell it, that $200 will be taxed at the capital gains rate, the long-term capital gains rate for, wherever your tax bracket is. So why this is relevant to real estate is that when you are selling your house and it has appreciated, so say you bought it for $200,000, and now 4 years later, you're selling it for $400,000. Well, if you have lived in your primary residence for 2 of the last 5 years, you can be exempt from the first $250,000 if you're single, or $500,000 if you are married on the profits from the sale. So in that case, you bought it at $200,000, you've lived there for 2-3 years, now you're selling it for $400,000. It's only $200,000. You won't have to pay capital gains on the profit that you've made from the sale of the home, which is excellent. There are some caveats to that. So it needs to be a primary residence, can't be a second home or a vacation home. You can only do it once every 2 years, which is understandable because it needs to be a primary residence. And you need to have lived there, as I mentioned before, for 2 of the last 5 years. So say you bought a house and you lived in it for 1 year and then you rent it out for 3 years because you were gone somewhere. If you come back and then you live in it for 1 more year and then you sell it after that year, now you've lived in it for 2 of the last 5 years, you will qualify for that exemption. But if you rented it out for 4 years, well, then you would have to move back in, live there for 2 years to then qualify to get that exemption. But you could also say, if you've lived in your house for 5 years or whatever, you can rent it out for 3 years before you then need to make that sale to then qualify for that exemption. So there you have it. It's pretty simple, but it can save you a ton of money. I will give the caveat again that I am not a CPA. I am not an accountant or a lawyer. So you will want to, consult with your own tax professional. But that's the gist of the rule. And if you can use it, absolutely do, because it will save you a ton. If you have any questions or concerns, please drop them below and I'll try to get back to you in a timely manner. And that's all I have for you today. So thanks so much.